This is the CMC Markets Connect Volatility Report. Financial institutions were thrust back into the spotlight ahead of the weekend break, with Deutsche Bank being the latest to rattle sentiment. The underlying share price was as much as 14% lower at one point on Friday before posting something of a rally, but the sector remains in a fragile state, with central banks showing no signs of relenting when it comes to policy tightening. One-day vol on Deutsche printed at 216.1% against 92.31% on the month. The rarity at other banks across Europe too, albeit to somewhat lesser extent. Commerzbank, with the underlying falling more than 10% at one stage, saw daily vol of 147.48% against 98.13% on the month. Similar patterns were seen on the likes of Barclays at 86.13% on the day versus 60.75% on the month, and SocGen at 115.45% on the day compared with 76.58% on the month. No surprise again that it was the EU banks which stood out in terms of price action across CMC's proprietary share baskets. The underlying, representing 13 of the largest Eurozone financial institutions, sat more than 7% lower at one point before recovering moderately ahead of the close. One-day vol printed 100.45% against 65.21% for the month. Moving slightly away from the banks, and the euro as a standout in terms of fiat currencies, there's concern creeping into the market now that with Eurozone banks in the spotlight, will the ECB need to provide liquidity support here? Euro-yen was the most active trade, with daily vol of 18.08% against 13.64% on the month. And finally, in commodities, we tested fresh 18-month lows last week, although a number of fundamental factors, ranging from talk that Putin may curtail exports given the low price, to concerns that the summer may not be favourable to harvests, saw the grain price add more than 6% at one point on Friday. Daily volatility sat at 55% versus 34.83% on the month.